And it's great to have you join us in another edition of the only weekend business program on Channels Television, Capital Market. The last one for the month of May. I'm Ladi Williams. Let's begin the show with a quick review of major global stock markets performances at the end of the week. Major bourses around the globe ended the last trading day of the week positive as traders grew hopeful that U.S. lawmakers will reach a deal to raise the government's debt ceiling, avoiding a potentially catastrophic default. On Wall Street, the Dow Jones Industrial Average ended the day with a 1% gain. The S&P 500 was higher by 1.3%, while the Nasdaq Composite gained the most. 2.19% was driven by tech rally led by Nvidia. In Europe, the UK's FTSE 100 index gained 0.74%, while Germany's DAX and France's CAC index closed the day up by more than 1%. It's also a positive close across the Asia-Pacific region as Japan's Nikkei 225 ended the day up 0.31%. Shanghai Composite Index gained 0.35%, while Hong Kong's Hang Seng Index, which hit its lowest level for the year on Thursday, was closed for the holiday. And our just fixed income market traded with mixed sentiment this week as players across all segments reacted to the latest hike in the monetary policy rate by the central bank's rate decision members, as well as the Treasury bill's primary market auction. It's also coming within the final week, wrapping up the Buhari administration. To review the market's activities, we have Jethro John, head of fixed income at Ancoria Asset Management, joining me via Zoom. Great to have you on the show.
Good evening.
So the MPC increased the MPR by 50 basis points, so it's 18.5% now. What's the implication for the fixed income market?
Okay, so we saw the MPR increased by 50 basis points to 18.5 at the MPC meeting on Wednesday. And although what my expectation is that markets may not really react as much. The only thing probably will be seen is the increase in savings rate as per CBN requirement for August last year, when they said 30% of the NPR has to be paid on savings account. And we may see that one adjusted by banks. And probably on the lending side, banks will probably want to advise their customers. They may not do that because I think at this level, probably don't have to be advising your customer every MPC. So you want to wait and see what the next one will be like. So on the bond space, I think we're not going to see much reaction on the bond because for Thursday and Friday, market was just more or less flat. Although we saw some cherry picking at the long end of the curve, because at this point, I think we're seeing investors taking advantage of the high yield. And considering the fact that I think MPC probably may just do another 50 basis points and they probably stop or pause and then see how the economy will react. So currently, I think 90% should be at a restrictive level considering where we are. So probably you have to stop there and then see how the economy will react to it. So bond market is cherry picking, and we're seeing some, buying interest coming there.
Yes, every investor is hoping for a pause with the rate hikes at this time. But let's look at the NTB auction. We see discount rates dropped across the three tenors on offer in this week's auction. Can we still see double-digit rates on the 364-day tenor this year?
Yeah, it's actually a possibility. For NTB market, you'll be surprised that despite the fact that we have NPR at 18, you see Treasury bill trading below, as in one digit. You're not even seeing it up to 10%. So I think major driver of yield and rate on the short end of the market is the level of the liquidity. So when the market is liquid, so you see the NTB rates will moderate southwards. So seeing a higher, a double digit, it's a possibility because once market is tightened in terms of liquidity, availability, you tend to see that NTB will go up. So, but why NTB is going at this level is owing to the fact that CBN has not been issuing actual NTBs. It's only the maturities that will run lower. And then there's huge demand for NTB, considering the fact that regulatory requirements of non-bank financial institutions, especially asset management, that have to, who have money market funds and need to put about 25% of the money market fund into NTBs. So banks too have to buy, at least because NTB account for, in terms of computation of liquidity ratio, NTB counts. Instead of leaving the cash at zero, they are just, so all these demands put together, make the NTB rate trading at this level. So if you look at it against inflation rate, you would think that at least 1 year paper, especially risk-free rate, should be trading at least at par with inflation rate. In 2017 and 16, where inflation was at 18, we saw an inverted curve, inverted yield curve that took NTB to about 20% level, close to 20%. But reverse is the case this time. We're having a normal curve whereby the short end is rates are lower and increasing towards the long end. So it's because of the kind of demand we have for NTB, and because borrowing is skewed towards the long end. The borrowing is majorly done on the bond. It's to fund the budget is the bond that DMO have been issuing from. So they tend to do the bonds, and then NTB just roll over. That's why you are seeing that NTB rate seems to be low. But like I said, when market is tight, when liquidity is tight in the market, like we saw about 14% 2 times this year, that was where market was really tight. So we can still see that. But even when it gets to 12, 13% levels post-auction, we still drag it down to about 10 because the demand will come and bring it down to sub 10.
And talking about the market being tight, is it the right time to invest in FGN bonds considering the current levels of yield?
Yeah, it's actually the right time for investors because this kind of yield, it's historically, we saw this 2016, 2017, and this 15 to 16 levels, it doesn't come, often like that. It's once in a while you tend to see that. And it's because of deflationary pressure that's being controlled, and that's why we've seen, and because of MPR, being increased by every meeting. So you tend to see bonds where we're at. But bond yield has gotten to a level that I think by interest of investors is actually advisable. The highest we saw this year through the auction was 16%. And then we've lost 16% since then. So market on the long end trades between 15 to 15.8. So it's actually the right time for investors to buy. But for traders, probably you still be trading with caution. I want to actually take a huge position on yourself because the inflation we have currently, that's currently above 20%, about 22.22. That's not the target inflation for the economy. So in another 1 year, inflation will moderate, and they probably will not be seeing this yield at this level then. So
all right, everybody's definitely looking for inflation to drop at some point. But very quickly now, before I let you go, what is happening in the Eurobonds market? Any opportunities in that space, especially for African sovereigns and corporates?
Yeah, for Eurobond market, there's a lot of volatility there. And the outlook is that, for traders, probably you don't want to take on positions now. But for investors, it's actually at the right level to take positions. We saw it, moved, especially the long end for Nigeria, 49.51. It got to about 30.5, moved 14 this year. But buy interest took it down to this level. So as at Friday, it was traded around 12.5 levels. And for investors, yeah, it's actually the right time to start cherry picking. We may not see it go so, we may not see it move far away from 30, but just start cherry picking and building your portfolio. That's the bad decision now. Nigeria, Angola, I think those are the most liquid when it comes to sub-Saharan Africa. So bank papers too, for Nigerian banks, they're very attractive now. Normally, the spread between most of those Nigerian papers and Nigerian curve is about 100 basis points. We're seeing it at it's about 100 basis points, but currently we're seeing it at about 200 basis points. So we're seeing some fast trading as high as 41 March 2026 for the bond. So those ones are also good to take position on.
All right, I guess every investor trying to beat inflation at this point. Thank you so much, Jethro John, Head Fixed Income Trading and Korea Asset Management. Thank you.
Thank you. My pleasure.
All right, so our next discussion now takes us to the capital markets performance under the outgoing administration of President Muhammadu Buhari and its contribution to the nation's economy, the challenges, achievements, as well as what to look out for from the new administration, which will be sworn in a couple of days. That's practically Monday. We have with us in the studio investment analyst and publisher of Stocks Watch, Mr. Bayomi Obabalujo, to tell us more. Great to have you on the show.
Good evening.
So how would you assess, the capital markets contribution to Nigeria's economy under President Muhammadu Buhari?
To do that, you got to see some basic indicators. And you start from the performances of the all-share index of what used to be the Nigerian Stock Exchange, but now the NGX. And so looking at that consistently from 2015, and then you just take the figure as at probably 28th of May 2015, and then till yesterday, which was 26th of May 2023. You will be seeing something in the region of 148% growth. And that you will say the market fared largely well under the Buhari administration. Right, consistently looking at the year-on-year performance of the all-share index of the NGX, you will see that aside from that very year, 2015, when the market had a substantial loss of 15.51%, and the following year, 2016, just 5.99%. 2017, the market recorded a growth of 46.98%, suggesting that what the market lost in 2015, what it lost in 2016, it recovered far more and even gave double in 2017. As expected, if the market had grown so well in the previous year, so it is expected that the following year people should at least take some profit. The market should a little bit relax. So in 2018, there was a decline of 13.89%. But 2019, as at May 28, when the first tenure of President Buhari was being rounded off, the market recorded a growth of 17.65%. And for the entire of the new, the second tenure from 28th of May 2019, aside from that very year when the market recorded a marginal growth by my own definition of 6.03%, for 2020, despite COVID, there was a growth of 62.5%. In 2021, a growth of 5.88%. And last year, the market recorded a growth of 25.2%. So far, so good. In 2023, as at yesterday, there has been a growth of 3.33%. So you will not say that the Buhari administration has not really benefited the market. But that is not the only index that you look at. Because again, we have to...
Because if you just look at that, we see that the market did shine in the market 8 years.
It did. Even if you look at the market capitalization, that also grew largely. The market capitalization as at 28th of May 2015 was roughly 11.6 billion naira. All right? No, trillion naira. Sorry. But as at yesterday, it was 28.84 trillion naira.
Right.
So you cannot say that is also recording a growth of 147.43%. But we will now begin to investigate where did all these figures come from. You will see that between 2015 and now, particularly in the last couple of years, we have seen MTN with huge capitalization added to the number of listed companies on the floor of the NGS. We have seen Airtel, and we have seen Dangote, and some of these companies too have largely performed well. But again, one thing we could say is that despite the inconsistency in policy and the fact that, well, if you ask me, I would say the government has not done well enough to kind of deepen its presence in the market, as far as I'm concerned. To a large extent, the market has benefited. But looking at it, again, the number of times that FGN savings bond had come to the market in the last 8 years, you cannot compare to the previous 8 years before 2015. That has been the only issue, as far as I'm concerned, is that you are floating the FGN savings bond. How many Nigerians actually got to know about that? So they have not done well to market it. I cannot remember if the president, as in Buhari, coming to the stock exchange for whatever reason. But I can recall that, yes, maybe the vice president came and things like that. But plus or minus, as far as figures, and figures don't have emotion, right? Yes, figures don't lie. So as far as the figures are concerned, the market has not fared too bad.
Even though the oil share index tells us differently. But we'll continue the conversation just in a few minutes. We're assessing how the capital market performed under the Buhari administration. We'll continue right after this break. Do stay with us. Welcome back. We're still reviewing the capital market performance under the Buhari administration. I still have with me right here Mr. Abayomi Obabalujo, publisher, Stocks Watch, right here in the studio. Thank you for staying with me. And yes, you did talk about the oil share index. Does look good, you know.
Market capitalization.
From 2015, up till now. Yeah. But let's look at foreign participation in the market. That has been on a downtrend.
You see, personally, right, I will never be in support of the market relying on foreign participation for its growth. Why? At any point in time, it will end as a short-term palliative measure, right? The market has to grow organically and locally. And as a matter of fact, that is how, and that is where I fought the strategies and the approach of the current management of the NGX. As far as I'm concerned, they have not done all that they need to do to deepen the market, looking at the local market. If we have a population of 230 million people, plus or minus, what percentage of these are investing in the local market here? And now, why are they not investing? In 2006, 2007, 2008, when the market actually recorded the best year, so far so good, since it was established around 1960 plus or minus, right? What was it that aided such growth, right? What was it? There was enhanced participation by the local people, right? But the current management are too elitist, for goodness sake. You don't go to hold roadshows in China when you have not done that in Onitsha. You have not done that in Lagos. They have not been active enough in promoting and deepening the market. And that is why the market will likely depend on foreign participation. And now if we are seeing less of participation from the foreign institutional investors, someone like me will be glad. Allow the market to grow by the efforts and the resources, because we've got everything here, all right? And again, what we are saying is this: there is no foreigner that will love your market for whatever reason. They only come for
even though we see more of local participation at this time, it's still not up to
let me tell you, it isn't. The local participation we are seeing will tilt towards local institutional investors, the pension fund administrators, and some trustees. But I'm talking about you and me. and the cameraman and the director and the market people, they getting to understand how that they can plan their retirement via the platform of the stock market. I was discussing with a lecturer in Osun State just last week. She says she doesn't understand anything equity, yet she is a PhD holder. Back in days, I met with a professor with Madam Fodio University, Sokoto, and he was regretting that he did not meet me when he was lecturer one. Why? Yes, very good at what he was doing, but he has not had somebody that will explain the stock market so that he will understand. What will keep the market up is not just the local participation of the institutional investors, but the generality of the people.
Because retail is very important.
Yes,
for
that
any
is
market.
what this market
But do you
needs.
think retail have a blame in this too?
You see, you can't blame market operators.
Because they can do their own research.
You blame the regulators. You blame those that are vested with the responsibility of deepening the market. All right? What stops them from coming to an institution like Channels, give us 1 hour, and we really want to educate the populace what the essence of the stock market is all about. What do they want to achieve by that? They want to enhance participation. All right? If someone has got 5,000 and you see the need of bringing it to the market, someone has got 10,000 and you see the need of keeping it in the stock market, you find out that most likely, because such investments will come and will remain in the market for a largely long enough time, not the short-term thing that we are doing, that we see now. That is the way the market is currently structured. The market is elitist.
Looking at investment climate now globally and here, we see the youngsters are very much interested in investing.
Yes.
And they like to invest in something they can just quickly, get on their phones, buy a stock, sell it when they feel like.
Yes.
Do you think that's what's discouraging?
No, such is also obtainable in the Nigerian market here. All right? To be frank, and again commending some of the efforts of the management of NGX. As we speak now, you can trade stock live as you trade crypto, as you trade Forex. Why? Most of the stockbrokers that are members, no, they are not longer members, that dealers in the NGX, so to speak, okay, have their online platform. You don't necessarily need to begin to take transfer form as we used to do like 30, 35 years ago when we joined the market. Now, all of them virtually are online. You can actually trade the market live, but who knows about this? And they need a preacher, they need a teacher, they need somebody to enlighten them the process, and that this platform is also available. But for goodness sake, alas, such information is not readily available.
All right, let's look at the incoming administration. Now, what would you like to see in terms of policies to deepen the capital market?
You see, this incoming government is inheriting huge debt. Okay, if I have it here, you talk about external debt in this country as we speak now.
We're heading to about 77 trillion.
Yes, as we speak now. Okay, now you are coming in with a lot of debt. I must confess, they need the capital market. So what they need to do first is to control expenses. Okay, that is one. They also need to boost foreign earnings because that will stabilize the exchange rate largely. We are talking about naira to dollar, all right, of less than 200 naira in 2015. At a time I import, right, between December and the last one I imported was April of this year. I think because the official rate of about 450, 460 was not available So you have no choice. Sometimes I was still discussing with my banker in the course of this week. They were telling me that you may have to queue for about 4 months. Okay, now there is no serious-minded businessman that will have to wait for such. So we have no choice than to look for currency of the official level. And that will come to about 730, 750. It will definitely kill entrepreneurial endeavor. So what do they need to do? They need to boost foreign earnings, right? So as to stabilize the foreign exchange. When they are able to do that, make these funds available to entrepreneurs, to business people. You can import at the regulated rate. It will boost economic activities, and everybody will be happy for it. Cut the expenses, and largely let the government intentionally focus their attention on the capital market, because you see, they go to China, they go to look for funds all over, whereas they can continually do bonds within the local market here. If the information circulates, we've got a lot of money within this country. So those are the kind of things they need to do basically, and as a matter of urgency, if this government will bring...
And by urgency, I guess we mean the first 100 days once they hit the ground running.
Yes, those are the kind of things I expect them to do. See them first. Look at the failure of the previous administration.
Right.
Look at the areas of complaining. Then look at inflation. Inflation was about 1 digit when this outgoing government came to power. But what is inflation now? Over 22%. It will discourage people. How much were we buying gas? Maybe Dangote refinery, when it eventually comes on board and becomes operational,
everyone's hoping on
some of these things.
Refinery.
But unfortunately, what the federal government ought to be doing is what private individual is doing.
Right. All right. Well, we're watching. It's Monday, and we're all hoping for the very best. Thank you so much.
Thank you.
Mr. Abayomi Babaluja, publisher, Stocks Watch. Thank you so much for coming on the show today.
Thank you.
All right, so that's the program today. Countdown to May 29. That's on Monday. Thank you so much for watching Capital Market today. I'm Ladi Williams. Bye for now.